turnover for vanity, profit for sanity, but cash for reality. Also known as where did all the money go? Welcome to tonight's training topic. My name's Andy Crook and I'm your host. What I aim to do is to do a live training every week for around about 15 minutes on a topic to do with improving your garage business. Tonight's topic is all about the different types of profit really, and where does the money go in your business and how do you account for it. And we'll give a couple of examples. But one of the questions I ask people is when we're trying to work out what sort of size business they are operating, is people sort of automatically, and I can understand why, is they measure the size of their business or the success of their business based on the turnover. Now, that is a useful measure. In fact, it's used by the government to determine which category your business falls into. So, are you a micro business, a small business, or a medium-sized enterprise is determined partly by your turnover. It's one of the measures that they use. So you can see why everyone uses it. And I often ask to someone, about the size of their business, and they're only too pleased to tell me what their turnover is. And that is a useful yardstick, but it's not accurate in terms of measuring how successful the business is, which we'll get onto in a second. So how do you know which of those categories you fall into if you're basing the size of your business based on your turnover only? Well, if you're a micro business, your turnover's up to £2 million. £2 million a year in turnover. You're a small business up to £10 million, and a medium-sized enterprise if your turnover's up to 50 million. If you go above 50 million, you're a large business. So they're the yardsticks that the government use. However, I prefer to look at it in a slightly different way, and I always ask people how many people are employed in the business. Because a micro business, according to the government, is a business with less than 10 employees. So if you've got up to 9 employees, you're a micro business. A small business has up to 50, and a medium-sized enterprise has up to 250 employees. Now, an interesting stat I heard today, that half the income from medium-sized enterprises in the UK comes from less than 1% of the businesses, which is really, really revealing, in as much as that the very top performing businesses are bringing half the income, yet they're a tiny fraction of the number of businesses or the number of medium-sized enterprises. So it's easy to see why people use their turnover as the measure of the success of their business. They measure the size and the success of their business based on turnover. Now, where that goes wrong is if you had a business that was making a loss, and let's say it was a small loss, let's say you lost £10,000 a year and you doubled your turnover, there's nothing to say that you wouldn't double your loss, because the actual turnover metric is relatively meaningless. We use it as a vanity metric because it's the biggest number our business generates. It's the total number of sales. So turnover is purely a vanity metric as far as I'm concerned. I would prefer to know how many staff you had than how much turnover you had, because after that it becomes a bit meaningless. So if turnover is for vanity and profits for sanity, which of the profits do you use for your sanity metric? Because if you do know a little bit about business finance, you'll know that profit can be measured in a number of ways. The two most common ways are gross profit and net profit. But I'm going to muddy the water slightly, and I'm going to introduce operating profit. And we're going to base it on a business with a turnover of £100,000. Now that can be monthly or annually, depending on whether or not it's a sole trader or it's a medium-sized enterprise earning up to £50 million a year. So £100,000 would be roughly 1.2 million if it was a monthly income. So that would still make it a micro business. I wish my micro business was doing that, I got to be honest. So if we have an income of 100,000 and our direct costs, which if you've watched my my talk about fixed costs, are the costs that are associated with directly with the sale, were 50,000, then your gross profit percentage would be 50%. So you've got £100,000 income, £50,000 direct costs, you've got a gross profit of £50,000. But there are indirect costs to be considered as well. Now, your indirect costs are not directly attributed to the activity of the business. Now, your indirect costs are also sometimes called fixed costs, although there are some, as always with financial matters, there are some sort of exceptions to the rule, but a rough rule of thumb, your indirect costs tend to be fixed costs. Now, your fixed costs are not attributable to the activity of the business. The direct costs are the costs you get by doing that activity. So your direct costs will vary depending on what activity you do in your business, but the indirect costs, your fixed costs, will always be the same. The fixed costs, how I like to think about fixed costs, they are the costs that you would incur on a bank holiday Monday, i.e. no one goes to work, but the garage still has costs. You still have light, heating, rent on a bank holiday. That doesn't stop. So it's a nice way to think about your indirect costs. Now, your indirect costs on £100,000, and this is just a fictitious one, just to make the numbers nice and easy to me, were £30,000 or £35,000 of indirect costs. So far, out of your £100,000 income, you have spent £85,000, which are your indirect costs added to your direct costs. So your gross profit and your operating profit is now down to, basically your profit margin is down to £15,000. So where did all the money go? Well, so far it's gone into your direct and indirect costs. But that isn't all of the costs associated with the business. So your operating profit is sometimes known as the earnings before interest, tax, depreciation, and it's easy for me to say, amortification, which is a cost of any copyrights and stuff like that, which tends not to be an issue in garage businesses. So your earnings before interest, tax, and depreciation. So sometimes you hear it called EBITDA, is what people say as an abbreviation, but it's also known as the operating profit. So if you're still with me on the different types of profit, we're only on the second one, and it's already getting confusing. You can understand why people just use turnover, because we know what that is. It's the total amount of sales. So now we've got gross profit, which is our direct costs, which would result in this business, my fictitious business, the gross profit would have been £50,000. We then have the operating costs, or the indirect costs, which were an additional £35,000, which now leaves us, which means our total costs are £85,000, which leaves us with £15,000 of what we would call net profit. But before we take the net profit, and the net profit is what's left afterwards, is we have to take out of that tax and interest. And that is what we would often call the bottom line. And then if your tax and interest were £10,000, you would be left with 5% or £5,000 of the £100,000 in terms of your cash at hand, which is the measure for reality. So when I speak to garage owners, when they're looking at improving their business or looking at some of these financial metrics that are involved in measuring how you compare to other businesses, a useful tool for comparing similar sized businesses. Now, most of the businesses I speak to, most of the garages that I try and help, are what I would term micro businesses. That is businesses with less than 9 employees. Once you've scaled beyond the micro, you probably need a more structured assistance, if you like, with your business, because you're now above where I've been in business. Now, I've worked in much bigger businesses, but I've never owned anything other than a micro business. So you need help from someone else, because as I always say to people, what got you here won't get you there. So it's interesting to see that, you know, I aim to help micro garage businesses. So if you're bigger than that, my program probably isn't for you, even if you wanted to join it. So that's people with up to 9 employees or a turnover of up to 2 million quid. Now, you can see that if you're comparing micro businesses with another micro business, and this is important. So I've recently done a talk about metrics. If you're looking for an external comparator that you could use is what we call the EBITDA ratio, which is the earnings before tax, interest, depreciation and amortization ratio, or sometimes known as the EBITDA ratio or margin. Some people call it a margin, just to confuse things. Everyone likes to use their own terminology. This is basically what's left after the operating profit, or the EBITDA, which in our case was £15,000, divided by the income. So 15 divided by 100 gives you 15%. So you can see that that was a ratio of how much money your business can turn out of, for every pound of income, how much money does it actually turn out in profit before tax and interest. Now, that's a real useful comparator for similar sized businesses within the same sector, because you can understand that if your business is in a different sector, your earnings or the earning capability might be different, because your costs might be different, or the amount you can charge for your services might be different. You've also got to be careful when using the EBITDA ratio, is if the business you're comparing yours with is heavily leveraged with debt, because it doesn't include the interest. Because a similar sized business would have similar taxation, but it won't necessarily have similar amounts of interest to pay. So be careful, especially if it's mortgage and etc. is in that interest. You could see that most of the resulting cash at hand could be paying interest, that if you were comparing it to. So you can see why there are always caveats to any of these systems, or any of these metrics that you use. So why is it handy to use the size of the business, not in terms of turnover when I look at a business, but in terms of the number of people who work in the business? Because there are some reasonable rules of thumb that you can apply to a garage business to work out roughly what their income is anyway, and therefore have a good idea of where they should be in terms of net profit or cash at hand. So if you take the typical technician in a business, so we're talking about a micro business now, so up to 9 people, but we'll get to the sort of the detail of how a 9-person garage may look. So a micro business that's on the verge of scaling to becoming a small business, how that might look. So you can see that for every tech that you're thinking of taking on, so this is where having a good idea of what would happen to your business should you take on an additional member of staff, you should have some form of model for your business, so you can predict cash flow for various different scenarios. And having a good model and a good cash flow forecast enables you to do this. It enables you to plan what you're going to do next, to see how taking on another member of staff, or maybe removing a member of staff, should be somebody coming up to retirement or whatever, or adding an MOT bay or whatever it is, how you can model that in your business to see what impact it would have, to see if it's worthwhile doing. So I've worked out roughly, depending on a number of variables, and they are variables, but we'll use some reasonable industry standards, that if you took on a member of staff, one tech, and you were reasonably sort of confident in giving him enough work to do, i.e. you've already got the work demand and you're looking to employ someone, that tech could bring in somewhere between 80 and 90,000 pounds in turnover a year. That's based on, a sort of around about 60 quid an hour you're charging for his labour, and somewhere between 50 and 60% efficiency. So you could bring in more, you can definitely do more, you can charge slightly more for your labour, increase your efficiency if your efficiency rates are higher. And then what would that be in terms of net profit? So, and then when we're looking at this, we've got to take into account that it will affect things further down the line. But as a rough rule of thumb, if we're looking at this and we're saying, right, for every hour, that technician will generate a certain amount of part sales, and we can work this out for our parts to labour ratio. So we're saying for every pound of labour income, let's say this technician is going to bring in somewhere between 75 pence and a pound. So somewhere a labour rate mix of somewhere roughly 50-50, somewhere close to that anyway. And it will differ, but if you know that data for your garage, you can work this out and place it into your model. And your parts margin, and we're going to put a really low parts margin on, we're going to put a parts margin in there of about 25%, and that's what gives me these figures. So you can see that these figures could be higher, they could be lower, it depends on your individual circumstances, but these are good rules of rough averages that I've worked out by speaking to a number of garage owners. And then we're going to pay his wages, and we're going to take out holiday pay, and we're going to take out training events, etc., days on sick, and we're going to work out that guy is going to bring in, or girl is going to bring in somewhere between 30 and 40,000 pounds of operating profit into the business. So for every single technician that you additionally take on, you can work out, you can add about 30k to your operating profit. And that's, so if we know that, we can work out how much a reasonable sized business should be having in terms of turnover, because it's roughly 80 to 90k per technician, and then operating profit, and it's not too far off. You've got to remember that you've then got to take out the indirects, the total fixed costs of the business out of that number. You can't just use that operating profit. That's for an additional technician. And now you also got to understand that having an additional technician will add to your fixed costs marginally. So if you have 3 techs in your business, you've probably got a front of house or someone managing them. We'll call it a front of house. So if you want to get to 9 members of staff, as big as a micro business as it could be, well, I would suggest that a 9-member of staff business probably has the owner, who could be on the tools or might not be on the tools. That's up for sort of speculation. But I reckon they would have a maximum of 6 technicians, probably 2 front of house and the owner. And that business would probably be turning over just around about £1 million, somewhere between 850 and £1 million. That's just how I would look at a garage business in my head, and that those ratios have worked out fairly good. So what you want to know from today's training is, where did all the money go? Well, now you know the money comes in and then it's used up in direct costs, the costs of doing the business, then indirect costs, our fixed costs, and then it's used up in tax and interest, and what's left over after that is the cash at hand. And that's the reality of the business. So if the percentage you end up with, as we have in my fictitious example here, is 5% of cash at hand at the end of the reporting period, whatever that reporting period is, and you know it's roughly 5%. If you go back to my profit first video and pay yourself first idea, is what you can do then is you can set your percentage for your profit first as to what should be left or what you would like to be paid for within your business. And you can take your 5%, as is in this case, for profit right at the beginning of when the money comes in. You can do it daily, weekly, monthly, quarterly, but you put that money somewhere else, and that's the profit or the cash at hand in the business, and that just prevents you spending it. Hopefully this training topic has been of some benefit, and you've got a better idea now of where the money's gone, and you understand the difference between gross profit, operational profit or EBITDA, and net profit, and then you should have some idea why there's not much left over at the end of the month. Thanks for watching. Any questions, send me a message. I'd be delighted to answer any questions. Have a good evening and take care.